getting past 17,800 would take some struggle because there are multiple, pivot points over there. So I think we'll get this volatility. But closer to 17,650, I would still suggest going into buying mode and keeping the stop below 17,575. And once we get past 17,800, which still has a good chance, then I think we'll look at rally to extend to about 18,000, 18,150. Right now, I have one buy and one sell. Our Crude is a buy. Keep a stop at about 226, look for targets of 240. And Bajaj Finance is a sell. Keep a stop at 6,020, look for targets of 58.60.
Okay, got that. Watch out for these. Mitesh, thanks very much. Catch you later in the day. With that, let's shift the focus to the commodity markets and see what Manisha has for us. Manisha, hi and welcome to the studio.
Surabhi, thank you so much for that. Well, I'm looking at the crude oil prices, and from a high of nearly $86 per barrel in this week itself, we've come down to $82 a barrel, and we've seen nearly 5% of a decline come in for the crude oil prices in this week itself. As I said, it has been a constant decline for the last 3 days now for the crude oil prices. This is happening even as the U.S. inventories have snapped a 10-week of a build-up, and we've actually seen the U.S. inventories declined by 1.7 million barrels. But the market's clearly looking at hawkish U.S. Fed, the strength in U.S. dollar. All of that continues to weigh onto the market. And then everybody who has some skin in the trade expects the crude oil prices to gain going forward because they are expecting a tightness here. OPEC, for one, says that the China 2023 demand could rise by 500 to 600,000 barrels per day. And they'd also say that they are looking at the global demand increasing by 2.3 million barrels per day. So clearly, nearly 30 to 40% of that increase in demand is coming in from China. That's exactly what Barclays also say, but they expect a higher demand coming in from China. They also are expecting a 500,000 barrels per day of a deficit in the second half of 2023, and that is when they say the crude oil prices continue to gain. As I said, they're expecting Chinese demand to rise by 900,000 barrels per day. OPEC expects that demand to be 500,000. So clearly almost double of what OPEC has been saying. This is what Barclays also is talking about prices going forward. In 2023, they're looking at an average of 92. We are yet to achieve those levels, by the way. And next year, even higher at 97. And WTI right now is trading at 77. They expect an average of 87 on that and 92 in the next year. So clearly there is bullishness going forward in case of crude oil prices. And it's not just OPEC and Barclays. Well, there is a report from Refinitiv which expects crude prices to average 90 this year. And by the end of this year, they're expecting $100 of a level, also a possibility. Stancy also came out with a report. 91 is their average for this year, 98 in the next year, 109 in the year after. Wow. I mean, clearly this is way too far away, but I'm just trying to tell you that this is very bullish cues coming in from global banks and brokerages. JP Morgan is anticipating an average of $90. Let me tell you, we haven't reached that average yet. Fitch is talking about 95 in this year, 88 in the next year. Clearly, they're not bullish going forward into the markets there. And this is Bank of America, 88 in this year, 90 next year. So mostly second half of this year and the first half of 2024 is where most people are bullish. The EIA has revised its, this is near term, by the way. They're looking at 83 of an average for the near term and 77 is, this is where we are trading right now. So bullish to very bullish cues coming in for the second half of 2023, as far as crude is concerned.
I thought there was a recession that was coming, exactly. Right? Wasn't that the plan? There's so much bullishness. I mean, where is the recession?
I think it's about Chinese demand, the tightness in the markets, and all of that really seems to be supporting. And the fact we haven't seen the Russia impact come in yet, that also Street is anticipating will come in later.
My positive takeaway is if oil has to go up so much, the dollar has to come down, rates have to come down, something has to give, right? So maybe that would be the silver lining. But anyway, thank you very much, Manisha, for that very interesting analysis on oil prices. Very quickly going to the stock of the day from the mid-cap markets, and that's Sequence Scientific, 12% higher because they have backtracked and will not do an acquisition. Let's get in Ekta. Ekta, why is the street so happy about this?
Thanks for that. Well, yes, the news on Sequence Scientific is that they have terminated the acquisition of Tineta Pharma Private